Welcome to another S&P 500 analysis. Today is July 26, 2023. The market traded in a narrow range until the FOMC announced its latest 25 basis point hike. And as we have expected, the reaction to the hike was pretty limited. And what we were basically waiting for is for Jay Powell press conference. That's when we expect there's going to be some volatile price movement. And that's exactly what we got. And here's what he said in the press conference that actually created those volatility. And we'll talk about that. Stay tuned. Let's take a look at this intraday chart here with some of the internals. As you can see on the S&P 500, it opened gap down and stayed down until after the press conference, Jay Powell press conference has started. Then you see that it came back up and turned into positive. And then here is when it started to reverse back down when Jay Powell made that statement about when he expects to see the inflation rate to come back down to 2%. And then after the press conference ended here, then we see this little, OPEX shenanigan for this run-up. So all in all, it looked kind of, positive day. If you look at the internal, you see the new high, new low with 104. More new 52-week high than 52-week low, and the up-down volume is almost 2-to-1 in favor of the up volume. But the VIX is still down at the 13 level, so the market participant was still very complacent. And also the put-call ratio is down at 0.65, so they are also risk on. And the advanced decline, the daily advanced decline, we have 864 more advancing issue than declining issue, which is a pretty positive sign because the S&P 500 actually down almost 3/4 of a point or 0.2%. So on a negative tone, we have a positive AD line and positive internals. And looking at this cumulative AD line for the New York Stock Exchange, you see that it is still coming up while the S&P 500 have not come up to this 4,600 level yet. So it is showing a positive divergence, and the expectation is that we most likely are going to see the S&P 500 come up to this 4,600 level. Now, that doesn't seem to be the case for the NASDAQ. Look at the NASDAQ cumulative AD line. It's still coming down. So we are looking at the NASDAQ 100 either start coming back down or this cumulative AD line make a heck of a run to come back up. So most likely, maybe we see some sort of compromise. The NASDAQ 100 come down a bit and the advanced decline go up a bit. So who knows? But definitely right now, we're still waiting for this negative divergence to get resolved. Now let's take a quick review of the trade plan I published in my Substack newsletter last night and see how it played out. And for those that have missed reading this trade plan, click on the link in the description below and go read it. I will also post a trade plan for tomorrow on my Substack page before the market open. And the best way to make sure that you get the plan is to subscribe to my Substack newsletter, and it will be sent to your email inbox when it is published. So once you get into the to my page on my Substack, click on this trade plan tab. Then you see all the trade plan that I have published. And here's the plan for today, which I published it last night. And then here is the chart of the plan, basically saying that if the price is able to move above this to 454.78, then we'd be targeting this 456.56. And if it continue to move above this 456.56, then the next potential target is 457.83 and into this upper range of the expected move at 458. Now, if the price is unable to get above this and stay above the 454.78, then we'd be targeting the price to come down to the 452.14. Now, let's go see how well this plan played out today. Let's go check out what I posted on the chat section before we go and review the trade for today. To get in my chat session, all you have to do is click on this chat. Now, in order for you to see this, you have to be a subscriber of my newsletter. So you have to subscribe in order for you to see this. And today, I basically chatted to say the SPY is chopping around the pivot level of that 454.78, and one would incline to short it. But the internal are positive. So with the FOMC announcement due, a little bit over an hour I said, I'm just going to be a spectator and just kind of watch for now. And essentially, I'm going to wait until after the announcement come out. So here's what I have put up on the post here. Here's the internals. You can see that the up-down volume ratio was positive, and also the net, traded volume is on the upside, and also the advanced decline is positive. In other words, more advancing issue than declining issue, and the cumulative tick is positive. That means there are more, positive tick or buying on the ask than selling on the bid. And same thing with the NASDAQ market. See the up-down volume ratio of 1.3 to 1 in favor of the up volume, and the net up-down volume is positive. And the advanced decline, 668 more advancing issue than declining issue. So it's positive, and likewise, the cumulative tick is also positive. The only thing that is negative is the index, right? The S&P 500 is down, and the NASDAQ 100 is down. Of course, this is the SPY and the QQQ. And here's how the price action was during the time that I posted on my chat. And here you see that the price is just kind of chopping around this 454.78. So either way, you're just gonna get paper cut and just chop to death if you go long or go short. That's why I said I'm just gonna be a spectator and I'm just gonna wait, because the market is basically just kind of waiting for the FOMC announcement. Now, looking at this chart here, this is the chart that we are basically interested in. Remember, before the announcement, it was basically just chopping around inside of this area and around this 454.78. Then when the FOMC made its announcement on that 25 basis point increase, we see it's still chopping around, not doing too much. And that's what we suspected or expecting anyway, because the market is pretty much priced in for this 25 basis point hike. So there's no surprise. But then here is when Jay Powell's press conference started. And as you can see, the price started coming up. And as it started coming up, I took a trade here for a long and then play it up to this target here, and also tweeted or put on my chat that I'm done. As soon as after it hit this target, then I exited and took my profit. Now here is when Jay Powell sort of make that statement that the staff is not forecasting a recession, and that helped push the market up. Now on this reversal, that's when one of the reporters asking Jay Powell about a rate cut, why the market is still pricing in a rate cut and that sort of thing. And Jay Powell reiterated to say he does not see a rate cut this year. Then he also further added this statement saying that he does not see 2% inflation rate until well into 2025. So that means that he just gave us a clue. The first time he gave us a clue of how long he intends to hold this higher rate. So that means he's going to hold it until at least into 2024 and possibly at the beginning of 2025. It's not longer. So that is what caused the market to come back down. Then, of course, after the press conference is over, then the market rebounded for this OPEX, the 0-day option expiration shenanigan. Be sure to go check out my Substack page for the latest trade plan. If you find the content in this video to be useful and informative, don't forget to smash the thumbs up and share this video. If you have not subscribed to this channel, show your support by clicking the subscribe. Thank you for watching and good luck.